You are watching John Ag Briefing, the desk that does not run on advertiser money, the desk that does not soften the data because it makes you uncomfortable. Spot silver is trading near $65 as I record, down from $121 in January, a 46% collapse in 5 months. That is the price. And what I am about to walk you through is not. Stay with me. On the 18th of June 2026, Kevin Warsh chaired his first Federal Open Market Committee meeting. He held rates at 350% to 3.75%. Markets expected that. What they did not expect came alongside it. Warsh became the first Federal Reserve Chair in 14 years to withhold his own rate projection from the dot plot per the Federal Reserve Board's published record. He did not skip a chart. He buried the roadmap. Of the 18 officials who did submit projections, 9 penciled in at least one rate hike before December 2026, per the Fed's Summary of Economic Projections, released on the 18th of June 2026. The median dot now shows the federal funds rate ending 2026 at 3.8%, up from 3.4% in March. Warsh also stripped forward guidance from the policy statement entirely. The statement was, in his own word at the press conference, curt. Matthew Luzetti, chief U.S. economist at Deutsche Bank, said immediately after, "The risk that they might need to raise rates has clearly risen." Silver fell. The 2-year Treasury yield jumped 16 basis points to 4.21%, its highest print in over a year per CNBC, the 18th of June 2026. The first cliffhanger is whether Warsh's refusal to submit a dot plot projection signals the most hawkish Federal Reserve era in a generation is being built one meeting at a time. Stay with me. The Silver Institute's World Silver Survey 2026, released on the 15th of April 2026 and researched by Metals Focus, confirmed that 2025 marked the 5th consecutive year global silver demand exceeded supply. The 2025 deficit, 40.3 million ounces. The 2026 projected deficit widens to 46.3 million ounces, the 6th consecutive shortfall. Here is the number that should stop every American silver investor cold. The cumulative drawdown from above-ground stock since 2021 now stands at 762.1 million ounces per the World Silver Survey 2026. Global mine production in 2025 came in at 846.6 million ounces, up 3% year over year, the single largest supply response in years. Still not enough to close the gap. The reason is structural. Approximately 70% of all silver mined globally is extracted as a byproduct of copper, zinc, and lead operations per the Silver Institute. Higher silver prices alone do not trigger new mines. The host, metals economics, decide. In October 2025, unencumbered silver in LBMA London vaults fell to a historic low of 17% of total holdings per the World Silver Survey 2026. Metals Focus. Managing Director Philip Newman called it an unprecedented liquidity squeeze. Lease rates spiked. Physical premiums widened. The market fractured. The second cliffhanger is whether that October 2025 liquidity event was a preview of a structural break that repeats in 2026 with less inventory and a wider deficit. Stay with me. On the 29th of January 2026, silver traded at an all-time record high of a 121.62 per ounce per LBMA spot data. The next morning, President Trump nominated Kevin Warsh as Federal Reserve Chair. Silver plunged 31.4% in that single session, per Fortune's reported CME Group settlement data. Goldman Sachs' Delta One desk published a flash note on the 30th of January 2026, describing the move as a reflexive sell-off driven by repricing of Fed independence risk. Morgan Stanley's quant desk calculated $3.5 billion in forced rebalancing of leveraged silver ETFs on that one day alone per Morgan Stanley's own note. From the $121.62 high to the correction low, near $63.90 on the 6th of February 2026, silver shed 47% in 8 days. The fastest peak-to-trough collapse in silver's modern trading history. Not because the supply deficit changed, not because industrial demand changed, because one man's name was attached to one government job. The third cliffhanger is whether the 47% crash from $121 to $63 was a complete repricing of the worst scenario, or whether the market has not yet priced what a genuine rate hike cycle means for silver's floor. Stay with me. COMEX registered silver inventories. Metal cleared and available for physical delivery against futures contracts stood at approximately 79.9 million ounces in mid-May 2026. That is a decline of over 75% from the highs recorded in 2020 per CME Group data cited by Indexbox on the 15th of June 2026. In London, LBMA vault holdings totaled 27,454 tons, approximately 883 million ounces, at the end of April 2026, roughly 20% below the January 2021 peak of 34,346 tons per LBMA published monthly vault data. London's total vaulted silver is 20% lower than its peak, while the global deficit enters its 6th consecutive year. The World Silver Survey 2026 states directly, "The market has clearly entered an era of reduced stocks. Tightness will not be constant, but liquidity will generally be thinner, lease rates more volatile, and price moves likely to be larger." That is not a blog opinion. That is the Silver Institute's own language in its primary annual publication. The fourth cliffhanger is whether COMEX registered stocks at 75% below their 2020 peak inside a market the Silver Institute calls a new era of reduced stocks, creates the physical stress condition that has historically preceded silver's sharpest repricing events. Stay with me. JP Morgan Global Research projects silver averaging $81 per ounce for full year 2026, more than double the 2025 full year average of $40.03 per the World Silver Survey 2026. At $65 today, that average requires silver to run significantly higher for the rest of the year. Goldman Sachs projects the 2026 average at $85 to $100, treating silver as what the bank calls a primary strategic metal of the green energy transition per Goldman's 2026 Silver Outlook. Citigroup's second half 2026 target stands at $110, citing acute physical supply shortages per Citigroup Global Markets Research. Bank of America's metals strategist Michael Widmer published a bull case range of $135 to $390 by year-end 2026, based on gold to silver ratio compression scenarios toward historical lows of 32 to 1 or 14 to 1. The institutional spread, $65 spot today. JP Morgan at $81, Goldman at $85 to $100, Citi at $110. Bank of America bull case at $130 to $309. The gap between the lowest and highest bank projection is $244 per ounce. That is not noise. That is institutional disagreement about which force wins, Warsh's hawkishness or the supply deficit. The fifth cliffhanger is whether silver at $65 is pricing the worst scenario in full, or sitting below every major bank's base case average for a reason the market corrects violently once it identifies it. Stay with me. The U.S.-Iran conflict began on the 28th of February 2026. It ended provisionally when President Trump signed an interim peace agreement reopening the Strait of Hormuz. Silver surged above $69 on the 19th of June 2026 on the Iran deal news per Trading Economics, then fell back below $65 as Warsh's press conference offset the relief. Silver is now caught between two contradictory macro forces. The Iran deal reduces energy-driven inflation that was pushing the Fed toward hikes. Bullish for silver. Warsh's hawkish first meeting signals higher for longer, bearish. Gold tells you how the market is scoring that match. Gold trades near $4,148, down 28% from its January 2026 high, above $5,594 per CME group cited by Fortune. Year-on-year gold gains decelerated from 106.8% in late January to 28.4% as of the 20th of June 2026 per Bullion Vault. The dollar index surged 0.9% on Warsh's meeting day to 100.5, its sharpest single-session gain since March 2026. A dollar at 13-month highs mechanically compresses every dollar-denominated commodity price. The sixth cliffhanger is whether the Strait of Hormuz reopening removes enough inflation pressure to force Warsh toward a more neutral posture, or whether 5 years of inflation above 2% means he hikes regardless. Stay with me. Silver's all-time high of 121.62s was set on the 29th of January 2026. The gold-to-silver ratio at that peak, 50 to 1 per LBMA spot, data cited by goldsilver.com. The 50-year historical average is 65 to 70 to 1. The market-corrected silver's ratio overshoot. Today, the ratio sits near 64 to 1 as of the 19th of June 2026. At today's gold price of $4,148, a 50 to 1 ratio implies silver at $83. At 40 to 1, the level seen in prior structural bull cycles per LBMA historical data, silver at $4,148 gold implies $104. At the 14 to 1 level Bank of America's Michael Widmer uses in his bull case model, the implied silver price at current gold exceeds $296. These are not predictions. These are ratio mathematics applied to live prices. The ratio at 64 to 1 is near the 50-year average, which means silver is not objectively cheap relative to gold right now. It also means every compression back toward prior bull cycle norms produces double-digit percentage gains in silver against gold. The seventh cliffhanger is whether the gold-to-silver ratio at 64 to 1 is a natural settling point after the most violent precious metals correction in modern history, or a compressed spring that releases when the next physical squeeze arrives. Stay with me. Warsh's Senate confirmation vote on the 13th of May 2026 passed 54 to 45. the most partisan vote on a Federal Reserve chair in the institution's recorded history per the U.S. Senate record. Sworn in on the 22nd of May 2026. June was his first meeting. He withheld his dot plot. He stripped forward guidance. He shortened the press conference. Then he said this on camera at his first press conference as chair: "The Fed will deliver price stability. The commitment to deliver is strong, unanimous, and unambiguous. And that's an important message we've missed for 5 years. And we're going to fix that." The next FOMC meeting is the 29th and 30th of July 2026. CME FedWatch as of the 17th of June 2026 prices a 66% probability of at least one rate hike by December 2026 per CME Group. That is a complete reversal from January, when 2 rate cuts were priced in. When Paul Volcker made a similar declaration in 1979, he raised rates to 20%. Silver crashed, recovered, and crashed again across a multi-year cycle before its next structural bull run. The 8th cliffhanger is whether Warsh's words, "We're going to fix that," are the opening line of a genuine Volcker-style inflation campaign that resets every silver price model currently in existence. Pay attention. Here is the bearish counter-argument. This desk gives it in every script, and today is no different. Silver is down 46% from its January 2026 all-time high, and a Warsh-led Fed with 9 of 18 officials projecting rate hikes is a structural headwind for all non-yielding assets. The 2-year Treasury at 4.21% on the 18th of June 2026 raises the opportunity cost of holding silver versus cash yielding above 4%. The dollar at 13-month highs mechanically compresses silver's price. Industrial silver demand fell 3% in 2025 to 657.4 million ounces per the World Silver Survey. 2026, the largest demand category is contracting. Photovoltaic silver demand falls another 3% in 2026 to 639.6 million ounces per the Silver Institute, as solar manufacturers cut silver per panel by 19% per unit per PV Magazine April 2026. Bar and coin demand fell to a 7-year low of 182 million ounces in 2025 per Metals Focus. Retail is not in the market at scale. UBS revised its 2026 silver year-end target down from $85 to $80 per goldsilver.com, citing demand destruction at elevated prices. The gold-to-silver ratio at 64:1 is near its 50-year historical average. Silver is not objectively cheap relative to gold. The Iran peace deal reduces energy-driven inflation, removing one of the primary arguments for rate cuts that would benefit silver. The bear case is real. I'm not softening it. Here's what the structural data says as of the 22nd of June 2026. Spot silver, approximately $65 per ounce. Silver all-time high, 121.62 hours on the 29th of January 2026. Silver correction low, approximately $63.90 on the 6th of February 2026. Decline from all-time high, 46% in 5 months. Fed funds rate, 3.50% to 3.75%, held June 18th, 2026. Dot plot median year-end. 2026, 3.8%, up from 3.4% in March. FOMC officials projecting 2026 hike. 9 of 18 2-year Treasury, June 18th, 2026, 4.21%. 14-month high dollar index, June 18th. 2026 gain, 0.9% to 100.5. 13-month high, 2025. Silver deficit, 40.3 million ounces. 2026, projected deficit, 46.3 million ounces, 6th consecutive year. Cumulative stock drawdown 2021 to 2026, 762.1 million ounces. Global mine production 2025, 846.6 million ounces. LBMA London Vault's end April 2026, 27,454 tons, 20% below January 2021 peak. COMEX registered silver mid-May. 2026, 79.9 million ounces, down 75% from 2020. LBMA unencumbered silver, October 2025, 17% of total vault holdings. Warsh confirmation vote, 54 to 45 on the 13th of May 2026. Gold all-time high, above $5,094 in January 2026. Gold price June 20th, 2026, approximately $4,148 gold to silver ratio. June 2026, approximately 64:1. Gold to silver ratio at January, silver high, 50:1. JP Morgan 2026, silver average, $81 per ounce. Goldman Sachs, 2026 silver average, $85 to $100 Citigroup second half. 2026 target, $110 Bank of America, bull case range, 135 to 309 CME FedWatch. December hike probability, 66% as of June 17th, 2026. 2026. Industrial silver demand forecast, 639.6 million ounces, down 3%. This is John Ag Briefing. The desk does not run on advertiser money. The desk does not soften the data because the headline reads better the other way. Every number in this script has a primary source. Silver Institute, World Silver Survey, 2026, April 15th, 2026. Metals Focus, Philip Newman, Managing Director. Federal Reserve, FOMC Statement and Dot Plot, June 18th, 2026. CME Group, Comex Inventory Data and FedWatch Tool. ELBMA, London Vault Holdings and Spot Price Records. Bullion Vault, Gold Year-on-Year Gain Data, June 20th, 2026. Fortune, CME Group Settlement Data, January 30th, 2026. CNBC, Fed Meeting Coverage, June 18th, 2026. Goldman Sachs, Delta One Flash Note, January 30th, 2026. Morgan Stanley, QuantDesk SLV Rebalancing Note, January 30th, 2026. JP Morgan Global Research, 2026 Silver Average Forecast. Citigroup Global Markets, second half, 2026 Silver Target. Bank of America, Michael Widmer Bull Case Range. Deutsche Bank, Matthew Luzetti Statement, June 18th, 2026. PBS NewsHour, Warsh Press Conference Transcript, June 18th, 2026. U.S. Senate, Warsh Confirmation Vote Record, May 13th, 2026. Trading Economics, Silver Spot Data, June 19th, 2026. GoldSilver.com, Ratio Historical Data and Silver Outlook. PV Magazine, Photovoltaic Silver Demand, April 2026. Pull every one of them, verify them yourself. That is the entire point of this channel. Silver down 46% from its all-time high, while the sixth consecutive deficit widens. Warsh withheld his dot plot, a 14-year first. 9 of 18 Fed officials project a hike before December. Comex registered stocks down 75% from 2020. Every major bank's base case sits above today's spot. This is John Ag Briefing. The numbers do not need a salesman.